The Hedgeless Horseman here. It's February the 14th, 2023. Just gonna go over a few news releases and we'll discuss a bit about investing. First off, here's a interview with Pierre Lassonde, which I think is pretty interesting. And he talks about what to look for in a junior, let's say, and he's just discussing briefly the thing about, let's say, free optionality play. Just have a listen.
Well, the company should be worth about $1 billion Canadian. If the company trades at 500 million, that's 50 cents on the dollar. If it trades for 250, that's 25 cents on the dollar. But if it trades at like a 2 billion market cap, you got to say, okay, what do they know that I don't know? Okay, like, do they think that this thing's going to double? And now you are already prepaying for the optionality, which is not what I like to do. I don't want to prepay. I want to have it for free, because that's how you make money. I want to be able to buy into something for 50 cents on the dollar that maybe could be worth $2 with more drilling, for example. So
I mean, this is and I've talked about this, my preferred place where you at least when it comes to core positions, where you basically buy what is already there on the cheap and you get all the exploration potential for free. So that's risk-free upside from a valuation standpoint. You're not paying anything for that success. You're not taking any risk at face value, but you would capture all the potential, because typically, okay, if we have an exploration story, which is a growth case and no resources, just a few drill holes, obviously you're paying for a future that is not yet here, because you don't have 2 million ounces of gold after 10 drill holes. You can't make a resource out of that. But typically, they start to price in the future, and that's why all the really, high profile exploration stories or growth stories, they tend to be always overvalued in the moment, because based on what is confirmed, it's very expensive, because they don't even have 1 ounce on the books. But in terms of what it's likely to become in the future in just 1-2 years, it might actually, be fairly priced. You obviously take exploration risk in those cases, because there's no certainty that they will find whatever the market thinks is going to be there at the end of the day, after 1-2 years more of drilling. So it's obviously much better, typically, from a risk-reward perspective, if you can underpay for what is already confirmed, and you get anything outside that, any exploration potential, for free. And that's what I've highlighted about Magna Mining, for example. This is there was a recent interview here with Jason, or article, where he says, my belief in funding this company is we can create a $2 billion company right here in this city, meaning Sudbury. FNX started off as a small operation before executing an incredible growth strategy and subsequently being acquired for 1.8 billion. We think potential exists to do that again. Okay, why do I like Magna Mining so much? It's because they have around 8 million ounces gold equivalent. It's easier for me to think in those terms. 8 million ounces. Pretty much permitted. Or it should be very easy to get fully permitted, let's say. Okay, as close to permitted as you can get. In Sudbury, Canada, tier 1 jurisdiction. You can't ask for a better jurisdiction. You can't ask for a better location. It's selling for around 200 million Canadian. Well, less than that, I think, today. Minus the cash as well. So obviously, you're not paying fair value for all the copper, nickel, PGMs that Magna already has on the books. And those ounces should be worth more than most ounces out there because they are the most de-risked and in the safest jurisdiction, where it's like, yes, you'll probably get to keep the value in those ounces. They're not going to get taken away from them. So all else equal, those should be some of the most valuable ounces around. And if you got around 8 million of said ounces, they should be trading way above peer average in terms of dollar per ounce. But it's still significantly undervalued just based on what is already known, what they already have, how much it's already de-risked. So obviously you're not paying anything for any upside surprises in them finding a footwall deposit or having more exploration success at Shakespeare. That is risk-free value or risk-free potential. That's the holy grail of risk reward. To capture any upside without taking on any risk. Other examples, I think it's a bit different, but ELO Resources, for example, we know they have a huge deposit. We will know exactly how huge the first version of Iska is by sometime next month, I think. And they recently put out news. Magnetic data today. Magnetic data strongly suggests that a large intrusive body lies below the Iska caldera complex, and that it is near to surface on the Cassiterita property. This intrusive is approximately 5 kilometers long by 3 kilometers wide. Diamond drilling and geophysical surveys are in progress to test for a potential major tin porphyry south of Iska and the adjacent Cassiterita property. And they have, you should read all the comments by Osvaldo and Bill Pearson, etc., and Chris Hale, the geophysicist. Anyway, here you can obviously see big. Is this the magnetic? Yeah, magnetic. So something here, depth. It's funny. This exactly looks like a headshot. Well, a profile of a head. Here you have the chin, nose, neck. So we're going down the throat of this. And here you can see it's like the scale. Yeah, there's something, let's say, going on here, and it's up to 5 kilometers long. Yada yada yada. This is a multi-phase system, so it's like porphyry plus epithermal mineralization. And typically, it's always better to have multiple phases or multiple events. I recently talked to Adam Lundin of the Lundin Group when he was here in Stockholm, and he said that Filo del Sol, or whatever it's called, Filo mining, that deposit had 3 different phases. So basically, it got enriched. First there was some mineralizing event, then it got enriched again, overprinted, and then a third enrichment event. And Iska at least have 2 that we know of, but I think there's actually, originally they thought it was like 3 different types of mineralization, so it might be up to 3, I'm not sure. But the important thing is, like, this is already huge. What they've drilled so far makes Iska already huge. So basically, I think you don't pay full value for the huge deposit, which is already confirmed or will soon be confirmed, and you get everything else for free. All the porphyry potential. If they find nothing at depth, if there is no porphyry, or there's a porphyry but they don't find anything in terms of concentrations of mineralization that are high enough to be economic, you would still not be overpaying, I think, for ELO resources today. And here's another profile of that magnetic body, I guess. Here you got the Santa Barbara grade shell. So you can see, this is just a small. These are just small portions of this entire trend here. And this is the high grade, feeder type pipes. But it's like wide open. Absolutely wide open. And as we know, ELO has like, I don't know, 14 other projects in the vicinity. I mean, Iska was their first Bolivian project that they tested, and they already are finding one of the largest deposits that's been found in the last few decades. And that's still growing, and obviously according to the IP it might get a lot bigger still. So I mean, think about it. It's like you can't really beat that kind of risk reward. The iffy part being, at least that I can see, yes, it's Bolivia. That would be like the thing, but as we've seen in recent articles or news, I think it's the Chinese companies are getting in now to look for lithium. So my hopes is that Bolivia will continue to get better and better for miners and mining. So obviously you would have, in the case of ELO, I mean, this is a first mover advantage. I mean, literally first project you drill and you find one of the largest deposits in decades. And they were able, with the help of Osvaldo, obviously, to pick up all of this, because it's like a lexicon on Bolivian deposits and targets. And you have like major mines in the area. Corol, I think that's a tin mine, I'm not 100% sure. San Vicente mine, etc. So I mean, imagine all the intrinsic value in this slide, coupled with what you already have, coupled with how much larger it potentially could be. That is, I mean, that is also, in my opinion, it's like you're not paying a cent for any upside risk or upside potential. And other cases might be like, well, it's not maybe 100% the same thing, but like Montage Gold, you get 4 or 5 million ounces already. Obviously that's going to grow, and you're not even paying full price for that. So I mean, that's how, I mean, it's so obvious when you think about it. I mean, this sector is right now this sector is handing out free risk adjusted money all over the place, a bunch of money on the table. So it's like, yeah, one could complain, let's say, about that fact that, hey, it's super easy to be an investor right now. Because it's almost, if it's an above average project with above average management team, it's almost impossible to be overpaying right now. So it's by definition then impossible to be making a mistake. And of course, most people see mistakes as like, oh, if I lose money in any given time frame, then it was a mistake. That's not how investing works. If you overpay for something, you made a mistake, even though you can make even more money on that. Or it, goes up even more. I mean, there's a bunch of examples of like Tesla and cryptos, etc. They were already nosebleed overvalued, and they still went up. So some would say, look at that. Well, share price or whatever went up, so obviously I didn't make a mistake. I mean, for a value investor, you made a mistake as soon as you bought the stock. And you got, quote, lucky that it kept on going up. But if you don't sell in time, the risks are to the downside, because you're overpaying for a future that is not even here yet. You're overpaying for potential that has not happened yet. That's the polar opposite of buying something on the cheap with a lot of exploration potential, because then, by definition, risks are to the upside. Chronic risk to the upside as long as you hold something that is cheap. And if you get exploration potential or growth potential that you're not paying for, that means there's even more risks to the upside. And the best part is that you're not even paying for it. You're not paying up for a future that is even better than today, and you're not paying full price for today. Another here with Pierre Lassonde.
Mining business is, to my mind, the gold mining business is, to my mind, the easiest business to make money in. Now, of course, I know it intimately, so, you know, for me, I would say for you guys, you know, you may look at it as like, you know, he's completely stupid. But here's why. At the bottom of the cycle, the gold business is always, always, always undercapitalized. Always. People hate it. I don't want to have anything to do with it. I'm selling. I'm never going to have another share. It's always undercapitalized. And at the top, always overcapitalized. Always, always. So if you can really just be a bit of a contrarian and be in there at the bottom, and then when they're clamoring for gold, just give it to them, you can't go wrong. It is, I've seen it now 7 times, okay? Since 1974, this is the 7th cycle. So it is a no-brainer. It's really simple. But you just have to have that conviction, that courage, you know, like we're at the bottom, we're at the top, and it is not that complicated.
You got to give me a call.
Right, I mean, he's basically talking about this. This presentation or interview, I think it was done, 2016, which would have been around this part here. This is obviously the Bear Creek mining chart, which is the trading sardine chart I've typically used. Now it went up, I think it went up, how much did it go up? Like, 200%, and now it's back here. So in my opinion, you can see that everywhere, it's like people are still depressed, etc. We're still in, you know, clear buy zone. We're not even close to this sector being, you know, overheated, let's say. So, and as he said, undercapitalized at bottoms, overcapitalized at tops. Like, why do you think I'm putting as much money as I can in you know, good private placements? Because we're down here. So he's basically saying it's much easier than you think, because this market always goes up and crashes and goes up and crashes, goes up and crashes. We're simply, and have been for quite some time now, near the undervalued / undercapitalized zone. So all we have to do is, like, I haven't done any trading at all recently, I think, in my hodl portfolios. I don't need to. They're all undervalued. They're all undervalued. And just because some junior's down 5% today doesn't mean it wasn't undervalued yesterday. It's just how this market works. Everything is momentum driven typically. But again, as a value investor, you don't care what the sentiment is. You don't care what metals are doing. I think today, for example, let's see here. Well, markets are down. Dollar is down a bit, I guess. Like gold, you know, negative by a bit. Silver negative by 0.36%. Copper is a bit in the green. It's like, who cares? This is total noise as always. I think there was some CPI number out. I don't care. I absolutely don't care what the CPI showed. And I see people all the time guessing what the CPI is going to do and how is this going to affect. I mean, that's literally, again, what everybody spends their time doing. Trying to predict what is going to happen tomorrow. That is all everyone else is doing. Because for some reason, everybody thinks that in order to make money in any sector, in investing overall, you have to be right all the time. And by right, they mean you always have to be right positioned in every short time frame. If you hold something that goes down for 2 months, you made a mistake. If you hold something that went up for 2 months, you know, you did a great buy. I mean, that's literally what people are always trying to do. Or catch every single up and down. And it's like, look here, yeah, big retracement, sure. In hindsight, I should have sold here, sure. But back here, it just went straight up. How do you know that? Why did this go straight up? And why did we retrace here? It's like, I don't know, who cares? We're not at any point of overvaluation yet. So it's like just easier for me. More time to buy cheap. More time to buy cheap because this sector is going to get overheated like any other sector does. This has gone up. This sector crashes and rockets higher since the dawn of time, basically. And you can see a bunch of examples just, since 2000. And if we go here, for example, this was more of a, direct shot up. And this was kinda, quite direct shot up. But here we had a bottom, went up and then retraced. Okay, who knows? Maybe right now we're in this situation. Yes, made a bottom, retraced, and then it's gonna go higher again, and then maybe a retracement. Yeah. We don't know. It's like I want to catch the big moves. Because this sector is gonna get overheated sometime, and that's when we're gonna make the big money. And obviously, okay, how do I make the most money? This is wrong. How do I make the most money? It's certainly not buying here and then getting the last 58% until it's overheated and the risks are for sure materially to the downside. No, it's to buy as far away from overheated as possible. Obviously. I would rather buy here than here. I would rather buy here than here. And after the two global financial crisis, one could say I can't say exactly similar, but it's like, okay, that made a bottom here, went up, how much was that? 100% almost. Then it went down again, up, down, up, and then, there's a bunch of retracement here. This was not a pretty bottom. It didn't go straight up, for example. And I had some big corrections along the way. And now we're in untested waters because inflation, etc., is ramping. So right now we're, this environment doesn't look like any other previous environment within the last 20 years. But go back to the 1970s, sure. Then we can talk. And it's like, yeah, inflation, supply, demand, it's all favorable almost across, for any real assets, and again supply demand, that hasn't really to do with inflation, but it's just chronic, it's structural. We don't put enough mines into production, so every passing year, there's a reason why they call it critical minerals now, for example, and why majors are scrambling for copper and nickel and all of that. That's not going away. It's kind of getting worse. Just look at the LME inventories. Nickel just hit a 5-year low. Copper just hit a 5-year low. It's getting worse. And obviously better if you have future supply. Okay, let's see here. NOAA put out 2 news items recently. Significant new gold targets in the Mosquito Creek Basin. What's interesting is that Blue Spec, which NOAA sold to, I think it was Calidus, they actually hit a really good intercept quite recently. I think it was, Bonanza hit, or, at least a few meters. A very good looking hole. And they basically, here's an outlined arsenic contours in soil. I guess, this is a pathfinder for gold, obviously. You can read this news release yourself. They're doing a lot of groundwork. Nothing. This is not the type of work. Although it's required, you have to do the groundwork, obviously. Otherwise, you will be just. You could do waste a lot of money by simply drilling wherever, obviously. So this is required work, but it's not sexy work. In this type of environment where banked success is selling on the cheap and almost no positive news gets rewarded, this is going to be a snooze fest. This is not going to bring in any new buying now, but it sets the groundwork for maybe more exciting news releases down the line, obviously. Because in order to drill a good hole, you have to figure out where a good hole might be drilled. So this is again, this is at least pushing stuff forward and getting closer to picking drill spots, which could then produce actual assay results. And these are not, small trends. I mean, this is 5 kilometers. It's that their land package is so big. There's like, I mean, this is pretty crazy when you think about it. Like, this is a over a 50 kilometer trend right here. And again, you're not paying much for anything. I mean, market isn't pricing in any type of potential in this picture. That's for sure. They also put out more result from the Betcher target, mostly some air core drill results. This is like soil sampling, so you're not expecting anything. You're not drilling into an ore body with these. It's like you're testing the topsoil basically. So if you have, if this was a soil sample, for example, at 0.20 grams per ton AU, that would be a very rich soil sample. And also some RC drilling, 33 meters, so half a gram. I mean, nothing, too much to write home about. And these are all also on the lower grade side. But this is a very large area. This is 2.5 kilometers. Okay, RC complete 2000. They've drilled this with RC. That's the only, and here a few. This is pretty much the only testing so far. And the air core drilling plan 2023. So they're carpet bombing this area. And it took a while for the Grey mine. The Grey were drilling all over the place in the Pilbara before they hit the Hemi. So you'll be probably extremely lucky to find it immediately, even if it's there. There's no guarantee that there's a massive deposit here, or even let's say a decent to big deposit. But this is the kind of work you have to do. First, you have to where is all the smoke? And there's a lot of smoke here. But I haven't yet, hit let's say a discovery hole. So again, it's like this is groundwork. This is triangulating where there might be a deposit or two. So the good thing about Novo is still they have quite a bit of money in the bank. So if they end up hitting something materially here or Mosquito Creek, they could get very aggressive immediately because they have a lot of cash still. So this is something I'm paying attention to because I know what could happen. I mean, now the market won't care about this much because again, this is just, this is like soil sampling almost and a few RC holes. But as soon as they tag something, I think this case could change materially by one news release, because unlike most companies, they won't need to finance immediately, for example. And let's face it, it's already cheap. But it's like, I don't think the market will care too much until they make a discovery. And that goes pretty much for all juniors out there. So Novo is cheap based on the potential. It doesn't have that, material margin of safety. We do have the Beaton's Creek, and we do have the Beaton's Creek mill. So obviously, the sunk cost in that mill is probably way over 100 million, maybe up to 200 million or something. To rebuild that. So if we make a discovery, especially around the Mosquito Creek, because that's closer to the mill, this is where the mill is. Obviously, those ounces should be worth more than ounces belonging to companies that have no mill and would need to build it for 200 million, etc. So I guess I would summarize Novo right now as, let's say, a potential firecracker. They need to find something, make a discovery, legit discovery for the market to start caring again. But when they do, then it could get very exciting very quickly because they have, at least for now, I think all the money they need to be really aggressive. So it's more of a, I guess, like kind of wait and see in some respect, but also we can't forget about, I mean, the lithium mania is still in full force, and they recently did a deal with the lithium junior. So I guess, yeah, to wrap up, I mean, I think Novo is extremely cheap, but it doesn't have that tangible margin of safety. So it's like, if they find something, this is going to look really cheap, the valuation right now, because you're not paying for any of the potential really. So it's, in that respect, it's unlike, let's say, Magna Mining or Montage Gold or Elora Resources, who really have significant, substantial resources on the books. I mean, major deposits already, and you can like say, yeah, they're clearly cheap based on that, and what they already have, those are, you know, probably large mines. I mean, that's tangible value. I can't say the same for Novo, but it is very cheap based on all the potential, because they have a huge land package. So I'm hoping, fingers crossed, that Novo will in 2023 make a significant discovery, and you know, things will get fun again. Yeah, I think that was about. Defense metal also. Defense metals variability flotation tests yield high rare earth recoveries to high grade concentrates. Again, I'm certainly not an expert on rare earths, but since John Robbins is involved, and he became involved recently, and we know the critical minerals, and we know that China is, well, the Chinese spy balloon and all of that. I mean, geopolitics, the tensions are ramping higher. I think the West is getting increasingly worried about being cut off from supply in case there's a war, or I think actually China stopped the exportation of some new solar tech or something. So there's already kind of a trade war going on. It has been for some time. And this is, I think, as far as I know, the most material rare earth project, or the best looking one of any junior pretty much in North America. I can't swear on that, but I think that's the case. And again, if John Robbins is involved, he's probably involved because he thinks this is, you know, a legit project that's probably gonna get acquired sooner or later. So I mean, just to highlight here, flotation tests on variability samples from the dominant lithological unit of the Wichita REE deposit gave an average of 81% recovery to a concentrate assaying 45% rare earth oxide. Wichita is one of the few rare earth deposits under development from which a high-grade mineral flotation concentrate can be produced at recovery rates similar to those obtained by current rare earth producers. So I guess that means this is a very good-looking project. And Defense Metal isn't, I mean, it's not priced like it's a major deposit, or, you know, it's especially a major critical minerals deposit, and has a lot of value. So my guess is that, yeah, Defense Metals is very cheap, and it's probably getting even cheaper as geopolitical tensions are are ramping up, and as the project gets more and more de-risked with stuff like this. So I would be quite surprised if shareholders do not end up making money on Defense Metals. And that goes for pretty much every company I've talked about. So yeah, I mean, to sum up, it's like, this is where we are, in my opinion, in terms of valuation and sentiment. This is more for gold and silver specifically, but it's like, I mean, the copper juniors are dirt cheap as well. It's like people complain all the time now. It's like the juniors are not going up. It's like I'm buying more juniors every single month. The longer we are down here, and the higher my ownership of natural resources I can acquire, I expect to make even more money when the inevitable revaluation happens. So again, if we went straight up like this, yeah, I wouldn't complain because I would have made a lot of money. But if I can just keep increasing my ownership, buying more and more ounces, buying more and more pounds of nickel and copper, etc., in a world where supply and demand is getting increasingly favorable, and geopolitical tensions are ramping up, and inflation is kind of chronic, it seems. Yeah, I mean, I can't ask for a better layup than that, honestly. It's like, I think the market is, again, Mr. Market is totally stupid. Mr. Market is not pricing in the supply-demand picture we're seeing in natural resources. And I absolutely don't care what the CPI was today, or the markets are going, or whatever. I'll sell when what I own is no longer cheap, where I find something cheaper. Those are the only criteria I use. Contrary to almost everyone else, whose main job is basically to just hold or try and buy something that they think is going to go up tomorrow, regardless if it's undervalued or overvalued, and sell if it's going, if they think it's going down tomorrow. And it's like good luck in such a choppy environment like we are now. I mean, if I had to bet every day, if I had to guess, it's like, if silver and gold are down today, I'm guessing they're going to be up tomorrow. And if they're up tomorrow, I'm guessing they're going to be down the next day. That's pretty much it. So, and that's why almost nobody ends up making any money, because they always have too short of a time frame. It's like, even if you use this, which is obviously, it looks like a monkey could make money in this sector, and that's what Pierre Lassonde basically said. But he's obviously talking about longer time frames. Because even if you sold here, it still went higher before retracing hard. So okay, let's say this sector was overvalued here, you got out, it went even more overvalued, and you think, oh, I'm so stupid, etc. Yeah, but still, you wouldn't look that stupid, a few years later. Or if you started buying here, just bought, yes, you look stupid for a while, then bam. I mean, you could almost, not that I guarantee this with Bear Creek Mining, but I can guarantee that this sector will forever go from hot to cold, and hot to cold, and hot to cold. We're in the cold phase now. So the only play with the best risk reward is to buy when it's cold and hold however long it takes for this to get hot. Because when that happens, you will have made a lot of money. Even if this takes 2-3 years and you get 352%. The market averages 8 to 9% per year. It certainly does not average 350% in 3 years. But this is the kind of people believe that, hey, I can't have a 50% retracement. I can't be down. I can't buy here and it goes down all the way here minus 62%. That can't possibly happen if I am to make money over the long term. Now that's 100% bullshit. If anybody just started buying around here, even if it went down 50%, if they only kept on buying all the way down, the cheaper it became this sector, the more you bought. You just end up making a lot of money. So it's like, when you think about it, it should almost be impossible to lose in this sector over the long term because it's so predictable. It's so you don't know when it's gonna hit this rail or this sentiment environment, but it's going to. If you just know that, and you buy something that is, I don't know, 50% undervalued right now and has a really good growth profile, and it might become, at today's prices, might look, 200-300% undervalued in 2 years. Plus you have all the, risk to the upside in terms of sentiment, because yes, sentiment can get worse, but it's a much bigger move if it goes from this sentiment to up here than from here down here again. Yes, this bottomed here, went up and then down again, but when that actually bottomed, then it just went up, I don't know how many percent that went up, 1,900%. So it's like, that's how I look at it. It's like, yes, price wise, yes, we have like 30% risk to the downside, which would be temporary, and I'm talking as a sector overall. I don't know, Bear Creek Mining, and it's like, yeah, 300, let's say 300% risk to the upside, and that's a matter of when, not if. That is why I don't think I need to do anything. I just buy and buy and buy until one of these days sentiment is going to change, as it always does, and we're going to be well on our way. And again, just this pop here was 200%. Do you think Bear Creek Mining went up 200% in value? Was the market efficient here and efficient there? How could that be? No, it's not efficient. It just went from, let's say, absurdly cheap, and that goes for a lot of juniors, to less cheap. And now we're back to quite cheap again. So it's like, I agree with Pierre Lassonde. If you just have grasp of how this sector works and how sentiment works, how on earth are you gonna lose money over time? How can you not make money from just looking at this, let's say, sentiment chart here? You just buy when it's low, wait however long it takes, and you're gonna make a bunch of money. The lower it goes, the more money you'll make after it's turned. From this point here to this point here, if you bought here, you made 250%. It went lower and you were panicking, but you just kept buying. From here, this purchase gave you 300%. Here this purchase 400%, 500%. So obviously it's like, it doesn't matter if you don't catch the bottom, because every additional buy as something gets increasingly cheap means high return. So if you added 5% here, that that 5% position went up 275. If you added down here 5%, more than double in terms of boost to the portfolio as we reach this place. So it's totally okay, because the future expected returns get so extreme at tops and extremely negative at bottoms and extremely negative at tops. That's like, you need less and less to have a material effect to your portfolio. And obviously the most expensive thing you could ever do in this short is basically sell low. I mean, if you bought here, sat through all the way down here, that would be incredibly expensive. Whereas if you actually just held and didn't at least sell, yeah, it would still be sitting at a minus 67%. But if you sold down here, you'd be down 96%. So that's why, and I've done this. I started talking about this up here, I think, which makes total sense. That from here or whatever, it's like we're past the point of selling. Now it's just degrees of how good the buys can become. Because even if you started buying at this level, just in the case of Bear Creek Mining, sooner or later, all of the buys at around this level will have given you good profits. And then by definition, the lower, the farther away from this, it just means even better buys and worse sells. So as this goes down, this meaning, junior sentiment, buying becomes better and better and selling becomes worse and worse, exponentially so. So maybe it takes 2 years to get back here. Who cares? Who cares? Most people don't even make money in this sector. But if you just can hold this until we reach this and try not to pick the worst juniors, if you are down from where we are, or I mean, I don't think if we're down 50% now, I don't think that's going to be a problem at all. That's just 100%. And as we've seen here, it's like, yeah, Bear Creek ran 200% in like 1-2 months. 100%. If you're minus 50%, that won't be a problem from this level. Unless you make a mistake, meaning it's like you can F up any given day. In order to win, we have to have a strategy that's deployed at all times. I can't just buy here and think, yeah, this is cheap, and then I sell out here when it's even cheaper. Yeah, good job. You actually bought cheap, but then you chickened out, and by definition you should buy more because it's cheaper, but you just, let's say, got scared. It's like, yeah, now I'm gonna market time, etc. Yeah, then you didn't follow the strategy. You thought you had a strategy. You bought when you thought it was cheap, and then when it became cheaper, you became a trader instead. Short-term trader because you think it's gonna go down back here or whatever. And maybe it goes back here. Who knows? But if you can't show yourself that you can stick to a strategy, you don't have a strategy. You can't have a buy condition that's like, yeah, I'll buy when it's cheap, but then I'll sell when I think it's, let's say, not gonna go up more or whatever. Either you're a value investor or you're a trader. And sure, you can, if you come a bit more advanced, you might, combine those in some way, shape, or form. That's fine. But it's like, I don't need to be a part of this all the way up here. It's like, if you just catch half this move, that's like 184%. You don't need to be like, yeah, in order to make money, I have to buy here and sell here. No, if you can just catch, if you could catch 82% now and then, that's good enough. Good enough. And if you bought lower and lower, that just means more. You don't need to catch the whole movement. That's why it's like, I don't need precision. This was cheap, this was cheap, this was cheap, this is cheaper, this is extremely cheap, we're cheap again, yada yada. One of these days, I think gold is gonna head over $2,000. And I think there's gonna be a scramble for gold juniors, etc. And if you consider that, like, what do you think in a hot market, in a gold fever environment, what do you think ounces in the ground are gonna trade for? Compare that to what you can buy them for today, and you can see that, hey, this would be worth waiting a few years at least to just capture that kind of delta. Anyway, thanks for listening. Consider me biased. Eloro, Novo, and Magna and Defense Metals are sponsors. Don't consider this to be investing advice. Don't invest money you cannot afford to lose. You always have to make your own decisions, buying and selling. I don't share your profits or your losses, etc., etc. But it's like, hey, there's a few people out there that really gets it, and they don't really look too often in their portfolios because they know they own something cheap. They know nothing made it overvalued just because gold or silver is down 1% or 2%. No, they keep watching for the news releases. The news releases actually change cases materially. Prices of gold and silver do not change cases materially. at least from day to day. So again, if you hold something that's like, yeah, it's 100% away from fair value, how often do you think you would need to check the portfolio, assuming the case doesn't change? I mean, you're 100% from, taking on an evaluation risk. So unless a junior goes up 100% in a day on no news, there's typically not too much to do. And again, if you could just average like 3.6% per month over the long term, that is a fantastic return. And with that said, juniors typically swing like 5% every other day. So you have to see through a bunch of incredible noise. But with that said, if something that is already cheap goes down 5% just because gold and silver sentiment is bad one day, getting in 5% cheaper, that can be very material over the long term. Even though it's like, yes, on a day-to-day basis, that's noise. But if you can buy something that is a buy, 5% cheaper, that is material over the longer term. And you don't need every story to play out. You don't need every story to grow 300% in value if it starts off with being 50% undervalued. And you don't need to be right about all of those over the next 2 to 3 years. If 30% work out when we hit a sentiment high, you'll probably have very good returns. Yeah, thanks for listening. Bye.